Hello friends, we'll be discussing certain details about one more illustration which is related to the journal entries. Now let's go ahead and figure it out. Now this is the fourth problem that we'll be solving regarding the journal entries, but this will be a little tricky. This will have certain balance sheet extracts as well. So let's figure it out. How do we prepare that, or rather how to go ahead with this illustration. I'll jot down this illustration for you. Make sure you also guys get the same thing aligned, and then we can together go ahead and solve the journal entries. By now I believe that you are aware about how journal entries are supposed to be passed and what exactly is required while kicking or going ahead with these journal entries, or while mentioning any of the kind of the journal entries, whichever be the question in your exam. So let's go ahead and figure it out with these or the last specific illustration regarding this journal entries. Let's hit it. So the illustration has been mentioned here. Let's read it out for your reference. A sends certain goods on return or approval basis to some of his customers. Few of his customers he sends out to it and records it in their books on 31st of March 2016. As of 31st of March 2016, the trade receivables balance showed 1 lakh, which included 7,000 of goods, or rather goods worth rupees 7,000, which was sent out on sale or approval basis. And those goods which were sent out for rupees 7,000, no intimation was received against them. So that's what we have to look after now. These goods worth rupees 7,000 were sent out at 25% over cost price, and this was sent out to two people, Mr. X and Mr. Y. For Mr. X it was 4,000, for Mr. Y it was 3,000. Mr. X did send his acceptance or approval as of 30th of April 2016. However, Mr. Y returned the goods on 10th of April 2016. Now we have to make the necessary adjustments and show how the accounts will look as of the balance sheet on 31st of March 2016. Also, we have to pass the necessary journal entries, and they've also added one more information here. Value of the closing stock has been made at 60,000. That means the closing inventory was valued at 60,000. So now that we have this question, we have to prepare certain journal entries. We have to show the balance sheet standing as well. So let's go ahead and figure out with the journal entries first. So now that the first entry that has been passed here is the cancellation of the stock. Rather, the first information that was provided to us was the 7,000 worth of stock. Now this 7,000 worth of stock has to be cancelled first, or rather we can say that has to be taken into consideration because it has been into trade receivables. However, this has to be taken into closing stock. So we'll have to pass the closing stock entry first. That is the first phase. So that is what we have passed here, and that means sales account has been debited and trade results has been credited with the amount of 7,000 itself. Let's go on to the closing stock value now. Now, out of this 7,000, Mr. X had already accepted it or sent it acceptance. So that means 4,000 has been already taken care of. The balance 3,000 has to be taken care of or cancelled out. So let's figure it out. Now that the first thing has been mentioned, that means 7,000 is the worth of stock that the customer has it. But what is the exact value of it is supposed to be mentioned here. So that is what we'll be mentioning right now. That means if you understand, this was sent at 25% over the cost price. So let's figure it out. What will be the exact cost price if it is less than 25% here, or rather if we take that 25% out, how much is 100% here then? Because it is at currently 125%. So if you can see, we have figured out that the closing stock value is ideally 5,600. Now, according to that, we have to go ahead and make sure that whatever balance has been sent out as acceptance is gone, and whatever is left will be taken care into consideration. So let's go ahead with the next entry now. Now the next entry would be the amount that is accepted by Mr. X. So that is 4,000 which was accepted by him. What would be the original cost here? That is 3,200. Again the same logic, 4,000 has been sent, or rather 4,000 is the hyped up price, which is 125%. So what would be 100% is something that we have to figure out here. So that is 3,200. Now here we mark the closure of the journal entries, and let's start preparing the balance sheet now. So if you can see in the balance sheet, the position of trade receivables and closing stock has been mentioned. Trade receiver clearly says that out of 1,07,000 was supposed to be mentioned for the previous year. So the balance sheet for the current year will have only 93,000 as trade receivables, and the closing stock, which was valued at 60,000, you have to add another 5,600 to it, as that was the stock that we suppose, or rather we can say it's still with the customer. So according to that, we have to take that into consideration, and hence the total amount of closing stock will be 65,600, and the trade receivables total will be 93,000, which gives you a total of balance sheet 1,58,600. So when all these things are done, this is how the balance sheet placing is supposed to be done. This is how the journal entries is supposed to be done. So I hope this illustration gave you a clear idea about what exactly you need to do whenever such situation arises, or whenever such tricky question comes into the picture. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.